Good afternoon, everybody, and welcome to the event of today that will delve into the relationship between nature and insurance. The webinar is a part of the Naturethon initiative and is jointly organized by Naturance and PIISA project. Now we wait a few seconds more to let the participant join in. See you soon. So, welcome again to the webinar. My name is Davide Michelin. I'm the communication officer of the Naturance project. And I will moderate the event of today. We are glad to present to you the second of our webinar series organized by the Naturance project as part of the Naturethon. Naturethon is a far-reaching initiative to organize citizen group meetings focused on identifying innovative financial strategies for nature-based solutions in the context of the climate action and disaster risk mitigation. Today's webinar is jointly organized by the Naturance project, of course, and the PIISA project, which will be presented to you shortly. But first, a few technical notes on how the webinar will proceed. We will begin with an introduction to the Naturethon initiative, followed by presentation from the speakers of today, that are Stefano Ceolotto from CMCC and George Farina from VU Amsterdam. You are more than welcome to leave your question in the Q&A section, in the Q&A box. All the questions will be collected and answered during the last session of the webinar. I think that's all. We can officially start now. And I would like to briefly tell you about the two projects of today, starting from Naturance. Naturance is an Horizon Europe project that examines the feasibility and performance of solutions built on a combination of disaster risk financing and nature-based solution investment. It does so by connecting existing measure knowledge network and fostering cross-domain knowledge sharing. Through annual festival hosted both. Naturance organized an annual festival hosted both online and in person that facilitated the collaboration between knowledge network, interested stakeholder, and the general public. These events can also be joined by Naturethon participant, and we will hear more about this later. But let's move on to a brief introduction to PIISA project, which stands for Piloting Innovative Insurance Solution for Adaptation. The project aims to develop and deploy a range of insurance innovation to cover at least half of losses attributable to climate change effects in Europe. The project hopes to support households, firms, and the public authorities to set up adaptation and create adaptation promoting conditions. Now it's time to go deep and present the Naturethon initiative. And for this, I will give the floor to my colleague, Soraya Melinato. Hi, Soraya.
Thank you, Davide. Good evening, everyone. I would also like to thank all the participants for joining us today in this second Naturethon webinar. My name is Soraya Melinato. I'm working in the Risk Assessment Adaptation Strategies division at CMCC based in Venice. And in the next few minutes, I will introduce you to the Naturethon initiative, and I will share with you some information about the project that we are running and for which we have organized this series of interesting webinars. So Naturethon. So what is Naturethon? Naturethon supports the creation of a citizens group aimed at discussing nature-based solutions and their applicability to disaster risk reduction and climate change adaptation in local communities. The idea behind the Naturethon concept is to link nature-based solution to the development of innovative ideas by local communities. The name and the design are recalled by Assonance Climathon events, which, as some of you may already know, Climathon events are events created to involve citizens together to think of new solutions to tackle climate change. And this is also how Naturethon works. At the heart of the idea, in fact, the goal is to stimulating active participation with the aim of gathering innovative ideas of implementation of nature-based solutions and their financing strategies. Next slide, please. But how it works. So in this slide, we can have a short preview of the timeline of the process. So first of all, you have to register you and your group in the project webpage. And then you have the opportunity to participate in several activities, such as webinars. As already Davide said, this is the second of a number of webinars that we have organizing. We are organizing between now and September. You can find the registration of the previous webinar in the project webpage. These webinars are an opportunity to explore topics related to nature-based solutions and their application in the context of disaster risk reduction. But also the Finance Innovation Festival that took place on May 23 and 24. For those who were unable to attend it, on the Naturance website, there are videos and materials of the sessions. So if you are interested, please check it. And finally, on the Naturance website, in the section dedicated to the Naturethon, you can find a digital library with multimedia and editorial contents. The third step is to engage your community in a dialogue. This means holding an informal discussion meeting with your group where you discuss nature-based solution, their application to your context, and a possible financial solution that can help their implementation. The last step is to complete the process and so present your idea. Any format is welcome. So, for instance, it's possible to present a short PowerPoint presentation, a brief textual explanation, or a picture of an example of MBS, a video, whatever you prefer, to explain the idea that your group has articulated, along with an exit survey that is available on the webpage. The next slide, please. So in conclusion, we invite you to visit the project website, which is really rich in content as we already presented. And we invite you to register and start this interesting journey. The last thing, the best inspiration solution will be rewarded by Naturance recognition and inviting the representative of the team to high-level project gathering. This is all from my side. It's over to you, Davide. Thank you.
Thank you, Soraya. If anybody has questions, of course, please leave them in the Q&A box. And now it's time to introduce properly our first speaker of today, that is Stefano Ceolotto. Welcome, Stefano.
Thank you, Davide.
Stefano is a postdoctoral research fellow at the CMCC, the Euro-Mediterranean Center on Climate Change. Today, he will review the current state of the market of climate risk insurance across European countries and elaborates on the relationship between nature-based solution and insurance, highlighting successful examples and limitation to scalability. Stefano, the floor is yours.
Thank you very much, Davide, for the introduction, and thank you very much to all of you for attending today's webinar. As Davide already mentioned, today we'd like to present you climate risk insurance as a tool for adaptation to climate change, highlighting the current state of the climate insurance market with a focus on European countries, and then talking about what I call the nature insurance nexus, or the relationship between nature and insurance. Sorry. Okay. So it is widely recognized that the climate is changing. Over the last few decades, we have seen an increase in both the number of severe weather and climatic events, as well as the number of losses attributable to these events. Such a higher economic toll has various causes, from the increasing frequency and severity of these events to the fact that more assets is being located in hazard-prone areas. In order to tackle the adverse effects of climate change, solutions are typically divided into two broad categories. Mitigations are solutions that aim at curbing greenhouse gases emissions in order to contain the future increase in global temperatures. And examples of mitigation solutions include like moving away from fossil fuels towards renewable energy production, to improving the efficiency of buildings and transport sector, or switching to vegetarian or vegan diet. On the other hand, adaptation solutions do not aim to reduce climate change per se, but to make society more capable of addressing and coping with the future climatic conditions. There are a number of different strategies and solutions that can be employed and that can fall under the umbrella of adaptation, which vary significantly based on hazards and sectors. Examples might include like structural flood protections, early warning systems, nature-based solutions. And in today's presentation, I will tell you more specifically about insurance and its connection with nature-based solutions. But before I do this, I would like to draw your attention and to briefly talk about what is insurance, because this is a concept that it is often mentioned, but maybe not everyone knows exactly how insurances work. So insurance is called a risk pooling instrument because it pools the risk of many different agents. For the single policy holders, this is beneficial because they are allowed to share their risk with other agents in exchange for a relatively small and periodic payment. And in this way, they can obtain protection from potential future losses, which might be too big for them to cover with their own private finances. And then on the other hand, for insurance companies, by gathering risk from many different agents living in many different places and that are subject to many different risks, they can offer protection in a profitable way, meaning that the premiums that they collect on an annual basis is usually enough to cover all the operational expenses, as well as the repayment of claim, at the same time making an economic profit. Climate risk insurance, you might guess, is a specific type of policies that deal specifically with climate hazards. So these are meant to cover, for example, against wildfire risk, flooding, hail, windstorms, lightning, and so on. There are various types of climate insurance products, which differ based on the specific sector and the specific hazards that are covered. Today, the majority of the climate insurance policies are so-called indemnity insurance. In this type of policy, policyholders are compensated for the actual loss that they suffer. However, this sort of policy entails a rather lengthy and costly process in order to evaluate the extent of the damage, which increases the premium which is charged by the insurance companies, and it extends the period between the submission of the claim and receiving the repayment. Another common type of insurance policy, which is becoming more popular in recent years, are so-called parametric or index-based products. In this type of policies, the compensation is not linked to the damage suffered, but it is triggered by manifestation of a certain climatic or natural condition. Because of this, this type of policy ensures much faster repayment of the claim, and in some cases, this can actually take place before the actual loss event takes place if certain conditions are met. However, this also creates a detachment from the loss and compensation which is received, that is called basis risk. And this often reduces the attractiveness of these type of policies and the eyes of policyholders, especially the more risk-averse one. On top of that, these type of policies tend to be primarily used by larger entities such as big firms, farmers, corporate managers, but not used by private households.
Stefano, sorry a second, because we don't hear you clearly. Can you check the microphone or?
Okay. Wait a second.
Okay, now we can hear you better.
Can you hear me now?
Yeah, let's try. Thank you for your patience.
Yeah, I'm sorry that the connection is not great.
But it's
Hopefully
okay now.
you're able to hear the rest of the presentation. Yeah, I've switched on my camera just in case to input. So now that we've seen what climate insurance is, let's discuss why climate insurance. However, this becomes particularly relevant for climate insurance because climate change is going to increase the uncertainty of the effectiveness of adaptation measures in the future, which means that the share of risk that might not be reduced through alternative strategies will become bigger and bigger in the future, thereby potentially making it more challenging for individual agents to cover it.
Stefano, sorry again. The problem is not was not solved. Maybe I don't know. We can go to
I don't know. Maybe if I
George,
send you the slides.
because we really heard scattering your voice.
I'm so sorry for that.
I don't know. Have you a external microphone maybe, or?
No, unfortunately, I don't. I think the problem might be with the strength of the connection, but I don't think I can do much about it. Maybe, like, can you hear me better now that I've interrupted the screen share?
Would you want to try to switch to the phone audio? I don't know. Maybe because it's really hard to understand.
Okay,
what you are talking.
maybe let's go with
the
George first.
Yeah. Thank you for the comprehension.
And I will try to.
Yeah.
No worries about that.
Okay. So okay, waiting for Stefano presentation, we flip-flop the order of today webinar, and I will introduce George Farina. Welcome, George. George is a research associate in environmental economics at the Institute for Environmental Studies at the VU-IVM Amsterdam, and his presentation will dive into a specific example of a nature-based solution as the green roof, which can represent a valuable asset for urban adaptation challenges. Welcome, George.
Thanks. Thank you for having me.
Okay, so please.
Yeah.
The floor is yours.
Okay, hello everyone. I hope you will hear me. Just interrupt me if my sound also crackles for some reason. Hopefully not. Okay, so we had planned a little bit of another way to do this, but it doesn't matter. It's fine. So what I will present today is the work that is being done for the PIISA project, which Davide just introduced, and one specific type of nature-based solutions evaluation and survey work that we are doing regarding green roofs in Netherlands. Okay, so what I will do, let me just put a timer there so that I don't eat too much of Stefano's time. Is first, I want to go back a little bit on the adaptation gap question and how nature-based solutions fit into this question, then give a very quick overview of the PIISA project, but dive in right into the green roof pilots that I've been talking about, and then present I wanted to present one very specific type of methodology that we use to evaluate this type of nature-based solutions. So we dive a bit into the sort of economic experiments that we make for this. All right, so this question of the adaptation gap, what am I talking about? It's just my starting point here conceptually to start talking about nature-based solutions. It's this idea that we are at a point in time where we have multiple pathways of adaptation in front of us. The main one, our current level of adaptation effort, the upper curve there will reach a very high level of climate damages, and the more we do adaptation efforts, well, the lower we will be on this curve. What we talk about with this adaptation gap, it's the difference there is between what we will in fact achieve, the level of the adaptation to climate change, between this level and what is socially, societally desirable in adaptation, what we really want to achieve. And the point really of nature-based solutions is to close as much as possible this adaptation gap. That's sort of the mind frame we have here. Now, nature-based solutions, well, you know all about this already. These are protection, conservation, restoration of ecosystems to address big societal challenges, flood risks, droughts, and so on and so forth, while providing other co-benefits to humans and to societies, thus, mitigating or adapting to those risks, while at the same time providing benefits to biodiversity. So in quite concrete terms, they are, okay, you probably know about this, they are wide-scale sort of adaptation measures, the restoration of floodplains, of wetlands, whatever, but also more small-scale infrastructures, like urban green infrastructures. And the one that we'll be dealing with today is one of those latter, which are green roofs. Okay, the way we are approaching this here, it will be mostly through this question of evaluation. How do we inform policymakers, deciders, on how and how much and through what mechanisms and through what policy instruments develop nature-based solutions. So really this needs of evaluation to upscale, to mainstream nature-based solutions. Now, the science of nature-based solutions is a very interdisciplinary one. It involves risk modeling, urban planning, policymaking, finance, obviously, land use change, environmental economics, social sciences, decision support, and so on and so forth. And throughout the last few really decades, we've seen a whole array of European funded projects and research projects aiming at providing increasingly high levels of evidence on the cost effectiveness or the benefits and the cost of nature-based solutions. And providing also ideas in terms of business models or financial models that we need to, as I said, sort of mainstream those types of measures. And the PIISA project is one of those. Specifically, it involves, well, innovative insurance products for adaptation. All right, so that's the PIISA project. Sorry. In a nutshell, it's it's a New Horizon funded project with 12 European partners in 5 countries in Europe that lasts 3 years until the end of 2026, if I'm correct. And it has a focus on insurance solutions. So the question is, how do we close this adaptation gap? Well, existing insurance products can protect against residual climate risks, but they don't really incentivize adaptation measures yet, and even less incentivize adaptation and the protection of nature or the restoration of biodiversity and these sort of things. So the question is, well, can new insurance solutions and products incentivize both private and public investment in adaptation? And also, in this project, the question is, well, can new climate services, can new knowledge really on nature-based solutions and climates, and can the diffusion of this knowledge enhance adaptation? And also, well, have insurance cover even more of risks, right? So in this project, we are dealing with 5 big pilot studies in very different sort of questions. There's one in Portugal dealing with wildfires and the design of insurance solutions to incentivize adaptation to wildfires. There's one in France dealing with the shrink of swell clay of the soil and the damage to buildings, and it's about building climate, well, an adaptation dashboard to inform homeowners and policyholders to adapt really to these risks. There's one in Finland on insurance products dedicated to agricultural sector, and it's about implementing parametric insurance for these questions. There's one in Germany dealing with forest insurances to protect against various climate change hazards and pests. And finally, there's the one that I will be talking a little bit more about, which is well, more dealing with nature-based solutions, really, in the Netherlands, where the question is, well, how can we stimulate the adaptation and the adoption of green roofs through insurance, but not only, but in part through insurance, to upscale green roofs in the country. Okay, so why this research on green roofs? Why are green roofs important? So what are green roofs? There are sort of structural improvements to buildings. So it really includes adding a variety of layers on roofs, of insulation and green layers on roofs. And these has, well, costs, but also various private and public benefits. For one, it includes, well, when we are upscaling this development of green roofs and targeting it spatially, it can have a significant impact on pluvial flood risk reduction at the neighborhood scale, at the district scale. 2, it lowers, paradoxically, the maintenance cost of roofs, and in fact, it protects buildings against hail or UV or rain damages, thus increasing the lifespan of buildings. 3, it provides some levels of thermal insulation, but indoor cooling and energy savings in winter, really. It provides habitat for some urban species, mostly local flora and aerial insects and birds. Then again, it depends a lot on how these solutions are upscaled and how connected they are to each other and to green corridors and to like existing habitats. And also, well, they are just nice looking and people like them, and they provide recreation and aesthetic values to the populations. And through this can also have a significant impact on property value. Okay, the question then is, well, upscaling green roof would increase risk protection, but it would also provide all those sort of benefits that we would call co-benefits also to the population. So the question is, how do we incentivize this? We are working in this project with Dutch insurance company that aim at stimulating green roof and a whole array of risk prevention measures, but including green roofs, through a variety of tools. Some are information campaigns and services to facilitate green roof adoption and installation, like information campaigns or support or whatever, and also monetary incentives. For instance, insurance premium discounts if people, homeowners, build a green roof on their homes, right? So the question of this research is, this is very nice, but the current adoption of green roofs is still occurring at a very small scale. Well, depending on the countries, it varies, but it's usually very small. So the question is, well, can improved incentives and finance arrangements, monetary transfers, subsidies, insurance premium discounts, information campaigns, can those enable widespread adoption? And also, can increasing our existing knowledge on green roofs benefits and costs, can this sort of provide a whole bundle of evidence that would help the mainstreaming of these solutions? So the aim of this research is really about doing this. It's assessing the enablers and barriers to green roof adoption today, monetizing, we'll go back to this term, the various benefits and costs of green roofs, and based on this, will inform business models and finance arrangements to enable this sort of initiatives. All right. So now we'll go back a little bit more into the research aspects of this project. Because I was thinking it would be nice for this webinar also. I was planning to do this after Stefano, so it would have been a bit less focused, but it doesn't matter. To also provide some examples of how this research is being done on green roofs and what other sort of methods we used, and especially in economics, to address these questions. So the question there is, okay, how to provide evidence on the economic viability of green roofs? For this, we develop a whole array of sort of methods. And one of the main ones that we'll be talking a little bit more about is that we use a series of survey methods that come from environmental economics. Namely, it's a thing called a discrete choice experiment and a variety of behavioral experiments that we use in order to assess how homeowners would respond to increased incentives without green roofs. I'll explain this in a second. We use also flood risk modeling. So we work with hydrologists, that build mostly on the Amsterdam case study, a variety of scenarios of green roof adoption, whether they are widespread or focused in some areas or these sort of things. And then, well, model how flood risk is reduced through these scenarios. And finally, well, we integrate these types of analysis in a more wide framework of cost-benefit analysis. And again, to provide also evidence on the economic viability of this sort of solutions. Now, perhaps I will skip these questions on cost-benefit analysis. The whole point of it is that what we want to do is, and it's what is usually done in this sort of big research projects on nature-based solutions, is we'll work on a case study, building an array of scenarios and baselines, and sort of try and monetize as much as possible with the scenarios. Like in 2050, we will build more green roofs. What would be the benefits in terms of flood risk reduction and asset protection? What would be the benefits in terms of those co-benefits, the biodiversity thing, the aesthetic amenities, and so on and so forth, and then reach cost-benefit ratios by also including the total cost that scenarios would mean. And when we do this exercise, we can link all those cost benefits to various types of stakeholders and actors in society: homeowners, the wider population, insurance companies. And then once we know who benefits and who pays, we can inform financial arrangements for this. That's the whole method, the whole framework. Okay, I have 5 more minutes. I just want to go a little bit more into details on this idea of economic experiment. I think it's not something that is talked about very often in this sort of webinars. The idea there that we're doing is using this method called discrete choice experiment. So it's a common method in to evaluate environmental goods in general and nature-based solutions that is based on stated preference. So what we're doing in this sort of methods is presenting to the wider population, so it's the Dutch population in this case, with a big survey where at some point they have this choice to make. So the idea is that respondents make successive choices on hypothetical scenarios that we present to them, which are characterized by attributes, characteristics, such as types of benefits, a monetary contribution that they would have to pay, a type of green roof, and they have to make a choice between those things. And then the statistical analysis of the choice being made by people allows us to estimate the relative preference for all these characteristics of green roofs and sort of establish the demand really of the population for all these various aspects. And because we introduce in those scenarios a cost element, I will explain this, we can estimate what we call willingness to pay. So how much the population would be willing to pay to benefit, for instance, to have their home being a little bit more cool in the summer during heat waves or these sort of things. So basically, what this allows us is to monetize, give a monetary value to these potential benefits of nature-based solutions. In this case, it's being applied to green roofs. So how it happens, I'm seeing questions appear. I will address them just after that. How it happens is we present respondents to this sort of thing where, please imagine a situation where you would move and rent to a new home. This new home would have, well, the same characteristic as your current one, but it would have a green roof on it. So I will ask you to make a choice between 3 new homes, 2 which have a green roof on them and 1 that doesn't at all. And all these options, they would lead to an increase in maintenance costs, and for instance, through rent that you would have to pay in order to receive those green roofs. So this is what it looks like ultimately. People have to answer these sort of things. And if you try to do it by yourself, it's actually not an easy question because it implies a lot of trade-offs. What am I willing to pay more in terms of annual costs in order to have my roof lifespan increased, but at the same time, there's a bunch of trade-offs in this sort of exercises. So you have 2 green roof option, 1A and 1B, and no green roof at all. And so respondents make choices in a series of these type of choice tasks, and then through the analysis we can estimate the demand for all these elements. One more aspect of this precise experiment that we're doing is a behavioral experiment. So the question we're also thinking is, well, how do different policyholders and homeowners react to different types of incentives? And if information campaigns widespread at the national level would try and increase demand for green roofs, on what aspects should they focus? So what we're doing also is what we call the between subject experiments from behavioral sciences, where we separate our sample between 3 wide groups, and we present them with slightly different information, either focusing mostly on the private benefits of green roofs, the fact that it provides cooling inside of your home, and it protects your roofs against damages, or mostly on public benefits, like on insisting on the benefits for biodiversity, or how it contributes to flood risk reduction at the neighborhood level. And then they have to make these experiments. So it's a nice little experiment. The question, the point there, what we expect from this, the results really is, well, as I said, make it a case for the economic and viability of green roofs. So what we will get from this is estimates of the benefits and costs of green roofs that will allow us to build these cost-benefit analysis scenarios while also knowing how different sort of incentives, information, or monetary incentives would steer the markets towards more or less green roofs, which allow us to inform the insurance sector on the demand for this sort of solutions, and for public deciders, of course. And yeah, in general, build business models for green roofs. Also, the point of these sort of studies is to provide insights into the replicability for other regions. And it's one of the part of the PIISA project to replicate this study in Italy and in Finland, actually. Okay, I hope I didn't lose anyone. I tried to cover as much as possible without going too much into details. And are we taking the questions now or later? Thank you for your attention.
No, thank you, George, for the insightful overview. I think that everybody were very, very awake about the presentation. Were very, very insightful. Thank you so lot. So now, personally, I have a few curiosities about your presentation, but maybe we can keep them for the Q&A section. So I will try again with Stefano if he join.
Can you hear me a little bit better now?
Yes, a lot. Let's try ABC.
Yeah. So I'm trying to share once again my slides and my screen, and hopefully it won't crash as it did before.
Okay.
I don't exactly know at which point of my speech, up until which point you followed me. So maybe I will restart from the beginning, trying to be as brief as possible over the first few slides that I had already covered. And also for, in the interest of time, maybe be a bit more succinct also during the rest of the presentation to avoid elongating the webinar too much. So
sounds great.
If we are all good to start, this is where we kicked off before. I told you that climate is changing, and we've seen an increase in the number of events and the number of losses associated to these events. There were two main strategies to address climatic changes. One is mitigation, that aims to reduce greenhouse gas emissions, and the other one is adaptation, that aims to make societies more capable at coping with new climatic conditions. And in this presentation, I will focus on two specific adaptation strategies. One is climate risk insurance, and the other one is nature-based solutions, and how the two are interlinked. I then moved on to giving a brief overview of what insurance is. I said that it is called a risk pooling instrument because it pools risk from multiple different agents, and that this type of instrument is beneficial both for the individual policyholders as well as for the insurance companies. And then climate risk insurance is a specific type of insurance policy which is dedicated specifically to covering climatic hazards like wildfire, flooding, hail, and so on. Then I said that in today's market, there are two main types of insurance contracts. One is indemnity, which links compensation to the actual damage suffered by the policyholders. However, because in order to evaluate the extent of loss, you need to send a person directly on the ground and conduct a physical evaluation, this type of policy tends to be a bit longer and more expensive. On the other hand, we have parametric or index-based products that do not link the compensation to the loss, but to the verification of certain climatic or meteorological condition. This enables a much faster repayment of the claims. However, it also inserts a wedge between the loss and the actual compensation, which might reduce their attractiveness for certain policyholders. And also this type of policy is typically reserved to bigger agents like businesses, farmers, and forest managers, not to private households. And then I started to introduce the benefits of climate insurance. Why should we seek climate insurance coverage? The first is that it allows to share the residual risk that cannot be reduced by other adaptation strategies, which is specifically relevant under climate change, because we don't know exactly how these strategies are going to perform under future climatic conditions. And so by ensuring that people purchase an insurance coverage, we reduce the risk that they might suffer unsurmountable losses in the future. Then insurance provides funds to rebuild and recover quickly after the verification of a loss event. And this helps alleviate both direct losses as well as indirect losses that might be produced by the reduced stream of consumption because people do not have enough disposable capital, or the reduced tax income, which is a consequence of the reduced consumption. Then insurance can also be used as a tool to incentivize adaptation, actually, because insurance companies can offer more favorable contractual conditions to those policyholders that implement risk reduction measure. One of these examples is the nature-based solution. If you as an insurer, as a policyholder, decide to implement a nature-based solution, your insurance company might reward you with a premium discount on your next year policy. And we are going to talk more about this in a minute. But then insurance is also valuable for the public sector. So if there is an event and all the losses are covered by the government, this might create fairly substantial expenditure for the public government. Whereas if part of these losses are covered by private insurance policies, then this might free up resources for the government to invest in other projects, potentially other adaptation interventions. And it also reduces the burden on taxpayers, because the money that is deployed by government to provide disaster relief typically comes from taxpayer money. Also, governmental compensation typically takes much longer than insurance policy to arrive, even though I told you that indemnity policy take quite some time to provide compensation. This is still much quicker than governmental compensation. And on top of that, most of the compensation provided by the government is actually not directed to the private household or companies, but it is dedicated to rebuilding public infrastructure. So the public relief does not really help the common Joe to recover following an event. And insurance can also help to reduce the financial stability risk, because in the case that the whole loss is covered by governmental money or public money, the cascading effect of the combination of direct and indirect and induced losses might be so severe that the resulting expenditure is so high that the government might end up not being able to, for example, repay debt, which can create potential country default risk. If part of these losses are covered by insurance, since the government will have to devote less funds to rebuilding and recovering, we reduce this risk. So I wanted to also give an overview about the current state of the market. For the sake of time, maybe I will reduce the number, the amount of detail that I'm going to give you here. So despite the wider range of benefits that I've just mentioned, the diffusion of policies to cover against climate risk is still rather low in certain countries. The literature refers to this as the insurance protection gap, or IPG for short, as I use here, which is commonly defined as the difference between the total economic losses generated by an event and the amount of losses which is covered by insurance. In Europe, we find that only 25% of the economic losses are covered on average. However, we see considerable differences across countries, across sectors, and across hazards. So it is a multifaceted picture, and there is no clear best option that we were able to identify. In general, it appears that southern states tend to have lower penetration rates, and that businesses tend to be more covered than households. However, this is not always the case for all countries and all sectors. And one final thing that emerges from the review that we've conducted and that the European Insurance Organization an organization pension authority has conducted, is that nowadays insurance companies do not appear to be very successful in incentivizing policyholders from implementing risk reduction measure, which I mentioned is one of the advantages of, or supposed advantages of the insurance policies. So I want to move to the second part of the presentation, which deals with what I've called the insurance nature nexus, and it is the relationship between insurance and nature. This is a bidirectional relationship, meaning that we have insurance that can contribute to nature and nature that can contribute to insurance. On the one hand, we have nature-based solutions that can serve as adaptation instruments, which by decreasing the risk profiles of the policyholders who adopt them will allow for better insurance conditions in the form of lower premiums, as I've already said. And then on the other hand, we can also have insurance policies which are specifically designed to protect nature and the ecosystem services that nature provides. At the heart of this nexus is the so-called insurance value of nature, which is the ability of nature to protect societies from a wider range of perils. In one case, this ability is exploited directly through the integration of nature into insurance policies. In the other case, we can use insurance to guarantee the continued provision of this national protection to a wider range of constituencies. So to start from the first of these two relationships, I wanted to show you a couple of studies that have tested the risk and premium reduction potential of nature-based solution. I have to make one disclaimer. Both these studies so far are only theoretical and hypothetical applications, so they demonstrate the potential of the investigated interventions, but then we're going to need to design appropriate financial and regulatory framework in order to ensure that these interventions are actually put in place and their potential does not get wasted. The first study that I wanted to show you, which has been conducted by Reguero and co-author, tests the risk reduction benefits of a coral reef restoration project along a 5-kilometer stretch of coastline in Dominica, and how this project would translate into insurance premium reductions. So the author showed that the project would generate considerable premium savings, which would more than halve the total annual insurance premium compared to a situation in which the project was not carried out. And while the premium reduction over the first 5 years of the project is not enough to cover the full cost of the project, if we actually consider the entire lifespan of the project, which in this case is assumed to be 25 years, then the combination of lower premiums and the more wider risk reduction potential creates benefits that greatly exceeds the cost of the project. We are talking about the potential total net benefit in the scale of $67 million against a total project cost of $6.5 million, which goes to show you the wider insurance value of nature that I was referring to before. And then the second study has been conducted by Munich Re, which is one of the biggest reinsurance companies in the world, in collaboration with the Nature Conservancy. And this considers a levees-back project to give more space to the Missouri River in the United States, combined with a community insurance policy. Their estimates show that the benefits stemming from this project would be represented for 23% by lower insurance premiums and 77% by the wider penetration and wider pool of policyholders afforded by the community policy. So this is because in that specific area, there is currently very low penetration rates, and therefore the lion's share of the benefit is covered by the wider pool of policyholders generated by the community policy. However, in cases where we have higher baseline penetration rates, the risk reduction benefit would constitute a much more sizable share. On top of that, the study shows that the insurance premium savings could be used to finance the land acquisition, which is needed for the levees-back project. Just during the first year, you could cover more than 25% of the total land acquisition cost only with the premium savings. And then, assuming a time horizon of project duration of 10 years, the author showed that the premium savings would allow to finance an amortizing bond, which would cover more than twice the amount of land acquisition cost. So once again, generating much wider benefit than the project cost. And then the second part of the nexus, the second type of relation, is when we use insurance to actually protect nature and its ecosystem benefits. And the first kind of these policies was implemented in Mexico in 2019. This was purchased by the Quintana Roo state to protect the Mesoamerican barrier coral reef system in the state, in collaboration with a consortium of hotels and tourism representatives. This is a parametric product that provides compensation when wind speeds exceeds 100 knots, and the maximum compensation of $3.8 million is paid out when wind speed exceeds 160 knots. This policy actually already paid its first payout. It was issued in October 2020 when Hurricane Delta hit the coastline of Quintana Roo, and the policy paid out almost $1 million in compensation. The second example, which follows directly suit from the Mexican policy, is a very similar policy which has been developed in Hawaii to protect the coral reef in that region. And this has been developed by Munich Re and the Nature Conservancy once again. This is also a parametric product. In this case, it triggers when wind speed exceeds 50 knots, and it provides a maximum compensation of $2 million. So I mentioned or I showed you a couple of successful examples of this insurance nature nexus, but unfortunately I have to say there are not many other cases of successful implementations of either of the two sides of the nexus. And this is because there are still a number of financial, regulatory, and conceptual barriers that limit the implementation. To conclude my presentation, I wanted to draw your attention to a couple of these barriers. The first is that in most of the examples that I mentioned, either the implemented measure or the developed policy tend to be rather big projects, and therefore this sort of solution to this day tend to be exclusive for big players. So we have a government state, we have the biggest reinsurance company in the world, we have a consortium of hotels in Mexico. It seems that these sort of solutions to this date are still precluded for smaller agents like private households or smaller insurance companies. And we need to define and develop more effective tools that incentivize and that enable the smaller players to actually start adopting these sort of solutions. And the second barrier has to do with the uncertainty surrounding nature-based solutions and their performance, especially in the context of climate change. Climate change, I told you before, will introduce uncertainty about the performance of adaptation measures. Nature-based solutions are no exception, and therefore this introduces the risk of non-performance either of the nature-based solution or the nature-based solution project which is implemented, or the insurance policy that is designed in order to cover nature. And this risk of non-performance in turn reduces the private incentives to implement these projects and to develop these type of policies. So we're going to need more research and more efforts dedicated about designing and developing new approaches that facilitate a more effective integration of nature within insurance schemes, which is what the Naturance project, together with the other sister and partner projects within the mission adaptation, are doing. One of these projects has already been presented by my colleague George, and he has already showcased what type of research and what type of activities can be devoted about understanding how people value nature, what is more important for them, and how then policymakers, regulators, and insurance companies can leverage this information in order to design more effective incentive schemes that enable the uptake of this type of solutions also for agents that are not the massive insurance companies or that are not states and so on. Thank you very much for bearing with me and I apologize once again for the poor connection and the inconveniences that this has generated at the beginning. A huge thank you also to George for stepping in and covering covering me at the beginning of this presentation, and to Davide, Soraya, and Agnese for handling these hiccups.
Thank you to you, Stefano. No, don't worry, the time flew away, so we managed it the second try. Will work as the first. So time for today is almost up. I saw Giorgio already answered to some of the questions brought in the Q&A box. I will handle a few questions, maybe one for Stefano. We can start just a few questions. Eric asked, why have insurance companies not been successful in incentivizing risk reduction measures?
Yeah, this is a very good question, and I don't have a definitive answer. There are a number of barriers that reduce both the uptake of climate insurance as well as the offering of climate insurance. So there is no one specific answer to this question. What I can say is that even when they do offer premium reduction incentives, maybe there are other frictions on the demand side that prevent these incentives from being effective, because there is a missing demand because of other factors that limit people, or that reduce the attractiveness of insurance policies from people's side. Another reason for why these sort of incentives might not be as effective is due to the fact that the amount of the premium reduction is comparatively small compared to the size of the investments that would be required by individual policyholders. So we're talking about I cannot give you precise numbers, so don't exactly quote me on that. But just for the sake of an example, let's say that you pay $800 a year in insurance premium, and the premium savings that the insurance company grants you is $100 per year. Okay, implementing a risk reduction measure might cost you $2,000 or $3,000. Okay, so the relative reduction in premium compared to the size of the investment is small when you consider them as when you consider them in a vacuum, when you don't consider the full stream of future premium expenditure. There are ways in which we can address this. For example, by developing other type of instruments that actually aid people in financing this risk reduction investment. For example, the use of specific loans that are targeted at providing people or providing household access to finances to implement these risk reduction investments.
Okay, I just moved to George for a question, because from our side, the people that work on European project exactly know the importance of exploitation and the impact of the project. So my curiosity was how can these surveys and experiments inform public policies? How can reach the policymaker?
Yeah, that's a good one. We're always a bit afraid that we're talking in a vacuum and just doing it for the sake of publications and science, but it's the outreach is always a big question. In our case, what we're trying to do is one, try and communicate through other platforms than just scientific publications. So trying to outreach to these sort of webinars, or through the Dutch authorities, to also communicate on the results of these surveys. The other one is to try and replicate the survey in other case studies. So we're, as I said, we are planning to try and see how the results we do and the estimates are transferable really to other climate regions of Europe. So what they call the boreal region, Finland, and the Mediterranean region, which most likely will be a case study in Milan. But how does it actually finally influence policymakers? If you find a solution, please of
$1 million question. Okay, thank you to try to find a way to. So now our time is really up. So I wish to thank you, George. I wish to thank Stefano, Soraya, Agnese, for joining us today, as well as the Naturance and the PIISA projects that make this webinar possible. And last but not least, of course, the audience of today. So thank you all. Follow us on social media and register to the Naturethon initiative to stay updated. And bye-bye. See you.
Bye, thanks.
Thank you.